Hello, this is Jordan. This video is being recorded on Wednesday, August 24th, 2022. Thank you so much for joining me today. Please like, comment, and subscribe. I would really appreciate it. In this video, I am going to discuss gold stocks' long-term underperformance. And I just have one chart here, and so we're looking at the Barron's Gold Mining Index there in the middle, and at the bottom is the S&P 500. And, Raoul Pal, founder of Real Vision, he posted a tweet a couple days ago looking at gold stocks over the last 40 years and seeing how their performance has been poor, and they haven't really been an inflation hedge as you might expect. But with that aside, I keep coming back to the fact that the S&P 500 in the stock market has been in a secular bull market since 2009 or 2011. I mean, wherever you want to date it. And that's what's hurt precious metals over the last 5 or 6 years, even though they have come up off the lows. Obviously, gold has done the best, silver's done the worst. The gold stocks have, they've been in between in terms of performance. But that's just the reality. And that's why, as I say, the real bull market in precious metals, in a secular bull market, a new secular bull market, it hasn't even started yet. And that's because the S&P and U.S. equities have remained in a secular bull market. Now, that could be changing, and that's really going to be the big issue over the next 3 to 6 months to see if the market loses the 40-month moving average and makes lower lows. So that's very important and very significant. But, let's just look at history here. And so I've highlighted the secular bears in the S&P, and we can see how gold stocks performed during that time. Obviously, during the Great Depression, from 1929 to 1936, 37, 38, depending on what you look at, gold stocks did really, really well. S&P was in a secular bear market. Now, that was also the case in, from 2000 to 2011, although the gold stocks did not perform quite as well as they did in the 60s and 70s. And, one big reason for that is the 60s and 70s. You can look there and see there was a 20-year uptrend in the gold stock, maybe even more than that. I like to say the 1957 low at the very end of 1957 was similar to the 2015 low in the stock market, or the 2016 low. In terms of how oversold they were, long-term indicators, there were quite a few similarities there. And then gold stocks versus the stock market, they really didn't start to outperform until 1964, although they did well in the very early 60s. It was really there in 1964. That's when, I'm not showing a ratio chart here, but that's when they really started to outperform. And interestingly, if you're looking at the S&P, the secular bear really started in 1968, late 1968, with that bear market, although that first bear market wasn't so devastating. It was 38%. But even if you go back to the mid-60s and you look at the peak in 1962, from the peak in 1962 to the peak in 1968, the S&P only gained 50%. So if we're looking at 1964, when gold stocks really began to accelerate, in where they were at that point in time, the S&P, again, it was similar to where it was in 1962. So that was basically only a 50% gain. So if you look at the mid 1960s, that was really dominated by energy stocks, gold stocks, and the problem, and the S&P was still on a secular bull then, although it was really towards the end, and so it didn't, that secular bull didn't end the way it ended in the 1920s and the 1990s. And I think a difference between then and today is back then you didn't have, gold stocks didn't have that much competition. There weren't gold ETFs. There weren't emerging markets. There weren't TIPS, treasury bonds. So that is one problem for gold stocks today, is that there's so much more competition. If you want to invest in something that's outside of, the conventional stock market, if you have a bearish outlook on the stock market and the economy, back then it was basically gold stocks was, the only thing you could buy. Today, you could buy TIPS, you could buy gold ETFs, You couldn't even buy gold back then until 1971, I think. So that's just the reality. But, nevertheless, if we look in the middle there, you can see what happened in the 70s. The stock market went sideways, and the Barron's Gold Mining Index, from the 1970 low up to the 1980 high, I think it still went up 15x or something like that. So that's the only, this relationship is not perfectly linear, as you can see. We just discussed the early to mid 1960s, and you can see the same thing over the last 5 or 6 years. But again, it's just, if we're going to see a real bull market take hold in precious metals, then that implies the S&P is going to be in a secular bear market. And so that's really, that's the big issue for the gold stocks, is if we're looking at the last 40 years, they've been, you had a long bear market from, essentially 80 to 2000, then you had 2011 to 2015, which was real devastating. So for the majority of that period, gold stocks have really only been in a secular bear for a decade, a quarter of that period. So that's just the reality. It all comes back to the stock market going into a secular bear. And, when that happens, whether it's going to happen over the months ahead or if it takes another 2-3 years, when that happens, that's when you're going to see a real bull market, and you'll see, gold stocks. You can see the annotation I did there at the end. That's how they're going to perform. And that will be a really significant breakout when the Barron's Gold Mining Index, takes out the 1980 and the, 2010, 2011 highs. That's going to be a super epic breakout. And obviously that will probably happen after, we see gold take out 2100. But again, I think I might just be babbling on here. But look, it all comes back to the stock market and that secular trend. And that's why precious metals have struggled over the last 5-6 years, or at least in real terms. That's why they haven't had a multi-year period where they're trending much higher consistently. On that note, thank you so much for tuning in. Really appreciate it. Let me know what you think in the comments, and look forward to doing the next video for you. Thank you.